Hello and welcome to Core Finance. I'm Matt Brown. I'm joined today for the first of 3 videos by Ronnie Chopra, who is an author at Wall Street Wires. Thank you very much for coming on today, Ronnie. I hope you are well.
Very good, thank you, Matt.
Good. We're starting off with a stock, UK stock, BT, with strong recovery potential. So just talk us through the chart and what you think the prospects are.
Obviously, in February of this year, the shares slumped because of the corrupt practices in Italy, and that resulted in a pretty much near a 30% fall, which is incredible for a company of the size of BT, taking off £10 billion in market cap. Currently, the shares are languishing around the 275, 280 mark, which I'm quite surprised by, because there was a heavy amount of director buying a few months ago. The shares are currently yielding just over 5%, and they're on a price-earnings ratio of around 10. So on fundamentals, I think the fall is well overdone. They've pretty much got a monopoly on the UK mobile market now that they own EE. And I think the share price has fallen far too much, and in this environment, it's a fairly defensive company. I mean, with all the geopolitical risk that's occurring at the moment, even if there is some kind of military conflict in Korea, I don't see there being much downside with the shares already on a very low valuation. But the upside is in excess of 20–30% within the next 6 months, I think.
And if you're buying below £3, where do you think they can go?
Well, I reckon by the end of the year they could easily go above 310, 320. We had director buying above 300, so I can easily see them exceeding that level. And if there's any kind of inkling of some kind of good news, and there are rumours that the open reach agreement is going to be in their favour, that the shares have a decent recovery potential. I mean, back in 2000, these were trading at £15 a share. They were floated in 1984 at, I think, £1.30. And they've had a real roller coaster ride, because from 1984 up to 2000 they went to £15, and then they fell back to, I think, around the £1 mark in 87 in the October crash, and now they're languishing just under 280.
So a definite value play there.
A value play and a roller coaster ride.
Indeed. Well, fantastic. Well, certainly a stock to look out for in the FTSE. Ronnie, thank you very much for joining us today.
Pleasure.